Good evening, everyone, and welcome to another episode of Cinnamon Chat with Thilan. Today, our topic is let's talk about money, understanding money, managing your growth, and managing yourself, your money, and growing your wealth. So, first of all, my name is Thilan. I'm a young entrepreneur, and I have an academy to teach entrepreneurship to kids and to teens. So, you may find me on YouTube under the YouTube channel name Cinnamon Chat with Thilan. And yeah, well, you're here to see me interview top C-level executives and business owners. So today we have a very special guest, and he is a top investment expert. So without further ado, I'd like to invite Mr. Thilan Wickramasinghe. Good evening. Hi.
Hi, Thilan. Great to see you.
Great to see you too. So I have a lot of questions planned today, and I plan to learn a lot from you.
Okay, very excited.
Okay, so I want to start off with the question that I ask a lot of people that I interview. Just a basic question, like about your family and a bit about yourself.
Sure. So I'm Thilan. I am the head of research and the regional head of financials at Maybank in Singapore. I also co-founded an edutech company called Create Lab, which runs in Southeast Asia and South Asia. I'm married. My wife's Shahani. She works in the financial industry as well. I've got two daughters, 14 and 9, Ayana and Areli, who are in school. And my extended family, my parents, my brother, they live in Sri Lanka.
Okay. So I want to know what you were like during your childhood, when you were a kid. I want to know what everybody I interview, I really want to know what they were like when they were a kid, because, the way you behave as a child, you usually tend to keep it up until you're grown up.
Well, I don't know whether I still keep up the same way I did as a child. I was told I was a fairly quiet kid when I was growing up. A lot of people said I was quiet. I don't think that's necessarily the case anymore. I was fairly curious when I was young, and I still am. So I think that's something that I kind of carry through to adulthood. I'm fairly carefree. I don't take things too seriously. So, and I think that's again something that was fairly prominent in my childhood, and I still have that. And I've had fairly close set of friends that I've kind of grown up with throughout school as well as through my adulthood, and I still keep in touch with them. A lot of them are in different places in the world, but quite a few of them are in Sri Lanka as well. So whenever I visit, I see them and I meet them.
Okay. So were you a studious child when you were, when you were in school? Were you very studious? Were you getting grade A's, or were you a backbencher in school? Don't take any offense. I'm just curious.
No. I think I was. I would be classified as studious, I would imagine. I think the only time my friends really wanted me for sports was as an umpire more than as a player. So I wouldn't say I was particularly sporty. So I went to school at St. Joseph's College and the British School in Colombo. And I do remember that we didn't have a thing called a backbencher in a way, especially at St. Joseph's, because every week you had to kind of move one row of desks forward, and so everyone got a chance to be a backbencher, and everyone got a chance to be a front row kid as well. I don't know whether they still have that, but yeah. So I mean, I would say I was generally fairly studious during school.
Okay, so you were a studious child. You did your work well, and yeah, that does repeat in our school as well. The desk going forward and backward, that does happen. We do change like that.
Oh,
and
that's
something
great.
I want to know, yeah. So something I want to know is, me as a kid, and I still do, I have a till, a a small till where I put money and coins into it to save up. Did you have one as a kid?
Oh, absolutely. So I mean, so my mother, she was a banker. So she worked in a bank in Sri Lanka, and the bank she worked for, I remember, started this saving scheme, and they gave all these children a till, a katea, that was the shape of a pink and blue elephant. And I still remember that. And I was, very, very excited to get one of those when I was very, very young. And it was, something that, every time I had a little bit of change, I would go and put put into it. And I think the most exciting moment was when it was really heavy, and you can, when you shake it and you can really hear that it was full. You break it, and then you take all those little coins to the bank and you put it into your savings passbook. So I did have one, and very, very fond memories of that pink elephant.
So I save a lot too. I have some few tills when I was a kid. I have about 2 or 3. My brother also has about 2 or 3. He has about 3, 4 tills that he's keeping. Still hasn't opened them at all. And he's like he's turning. Hey, he's 18 already, and he still hasn't opened them. So I guess he's keeping them forever.
Yeah. No, you get attached to them. I mean, breaking that till.
You want to hold on to them. You want to hold on to that money. You don't want to let it go.
Yeah, and breaking them is also quite sad, right? So I get what your brother's doing. I get where he's coming from.
So you live in Singapore, and that's a very, how do I say it? It's a very developed place in the world. So what's the difference between kids in developed countries and kids in already still developing countries when it comes to money?
So I think let's take a step back. So I think when you look at developed countries, I think one of the key things that you get is that you get more access to resources, right? The schooling systems are better funded, teachers are better trained, and there's also very strong educational policies that are put in place. So if you look at the PISA scores that come out for a lot of the OECD countries, which measure kids your age, 14, 15-year-olds, their ability to read, for science, for mathematics. Most of the kids who kind of rank very high on those scores are kids from developed countries. So Singapore, Japan, Korea, Finland, they tend to rank quite highly. But when you actually get down to money and understanding money, the surprising thing is there isn't that much difference between kids in developing countries and developed countries. And I'm sure we'll talk a lot about that later on in this session. But I think there is a lack of understanding. There was a very interesting survey that was done in Singapore by the Singapore Management University just last year. And it said, and one of the things that came out was 1 in 3 young people here are actually not confident about managing their finances. So, and I think that's something that you actually do see, across different countries, wherever, whatever the economic cycle, the economic position that they're in.
Okay, so in education, there's a difference, but money, they both have an equal knowledge on the subject.
Or the lack of knowledge, yes.
Yeah, but lack of knowledge, yeah. So, but they both know, and they're both equal in it. So they both lack the knowledge.
Yes, absolutely.
So when did you develop an interest in money?
Well, so I grew up in a household. So my dad was an entrepreneur. He had an automotive business, and I said my mother was a banker. So a lot of the conversations at home when I grew up was around businesses, about companies, about investing, and so on. So I grew up around conversations that involved money, about capital, about growth, and stuff like that. So that I had a very sort of early introduction in a way to what money is and what it can do. So I think that's where I kind of started to develop that. But I think it got stronger. So I mean, when I went to university, I did a financial management degree. So I was quite interested in the sort of whole process of investing, and how do you actually make returns, how does economies work, and so on. And it kind of then got consolidated. So one of my first internships I did in Sri Lanka on my first year of summer break when I came back to Sri Lanka from university was the Colombo Stock Exchange. And this was, I think, the year, or one of the first years that Colombo Stock Exchange had actually gone online. They had, they've gotten rid of the open call system. They had this brand new system in place to do trades online. And then my second year of internship was with Jardine Fleming Securities, which is now called Equity Stockbrokers in Colombo. So, I was in a way very lucky to, be around people who were who are dealing with money, who are dealing with capital, and that got me excited. I mean, it was something that I saw myself, interested in and excited about and passionate about. So that's I guess where it all started and came from.
So that's when you started developing an interest. But when should somebody, like a person in general, start to develop at least a decent sense of financial knowledge, financial literacy?
Sure. So let me ask you a question. You told me this offline, but I'm going to ask you this. What's your favorite subject in school?
Science and business studies.
Okay, so let's take science, right? So I can't tell you exactly when you leave school how you're going to use your knowledge of, say, photosynthesis or something that you're learning in class is going to translate into your work experience, right, in day one. But I can tell you with 100% confidence that you will need to know about money when you step out of your school and join society for the first day in your life, right? You will need to know how to earn it. You will need to know how to save it. You will need to know how to invest it, right? So just like how your parents got you into preschool and then primary school and secondary school now, and they didn't say, okay, Nethilan needs to wait till he's 18 before he needs to learn biology or science. I think learning about money is something that is very, very important and needs to be done as early as possible, right? So there are some studies that say that habits around money and conversations around money, kids actually start to retain and understand that from the time they're about 7 years old. So I think the earlier, the better, really.
I like that. The earlier, the better. So now, kids, you'll usually get these financial habits, whether they're good or bad, from their parents, right? They'll see their parents making financial decisions. So what are the bad financial habits and financial decisions that adults tend to commonly make?
Yeah, so I mean, I think there's quite a few, and I think I think the main one that I see quite regularly is living above your means, right? So you end up spending more than you make, and that kind of leads to the second bad decision that you make, which is actually taking on too much debt. And debt is not bad, but the type of debt you take is very, very important, right? So if you take debt, and especially when you live above your means, the type of debt you take tends to be debt to kind of cover your living expenses, not to actually build assets. So that's actually quite a negative thing that you can do. And I think a large part of that comes from the third bad sort of, or the mistake that a lot of adults do, and that is actually not having a plan. Right. So this is not just a financial plan, but it's a personal plan, a development plan that that as adults people should have, so that they can envision what they want to get over their lifetime, and then kind of execute on that. So I think that's quite a negative thing as well. Apart from that, one of the biggest things that I think a lot of people don't really think about too much is having emergency fund, right? I mean, when things can go wrong very, very quickly when you're an adult. It could be your children getting sick, or you getting sick, or something like that, and not having sufficient, or you can get laid off from work and you actually not having sufficient resources to deal with that, right? And kind of that follows with not having things like in investment products like insurance, right? So I think a lot of adults tend to go, this particular situation is not going to happen to me, so therefore I don't need insurance. I think the final sort of mistake, or actually the last two mistakes, one is not actually planning for your retirement, right? So I think for a lot of us today, I think more and more people are living longer and longer. Your average life expectancies are now pushing 80, 85, if you're from a middle class household. But most people kind of stop working around, if 60. So you have 30 years of not having income, and your ability to work also becomes that much more tougher. And not having savings and retirement plans is also another area that a lot of people ignore and don't make sufficient plans for. And I think the final one really is, I think, very, very important, is actually having conversations about money with their kids, right? I think for a lot of parents, they don't have their kids involved when it comes to money decisions and investment decisions. And I think that's something that's quite important to have, with your family.
Yeah, in my case, my dad is very open about it. He comes and talks about finance, things about me. So my knowledge is constantly kept updated, and the memory about all that knowledge about finance and everything is kept sharp. And every day I'll probably go on social media and search and see stuff on LinkedIn. Even just scrolling through LinkedIn will increase your business knowledge, your financial knowledge, and everything. Just a couple of scrolls is all.
Absolutely. I mean, I think what your dad's doing is great. I mean, he's having those conversations with you, and what you're doing is great as well, because you're actually building on that knowledge by actually researching yourself and going out there, reading articles, figuring out what experts are saying. So all those things are very, very important for you to have this holistic relationship with money.
Audience, if there are any questions you have to ask, you can just put it in the comments. So this is a very good opportunity for you to ask any questions that you might have. Now, for someone who's making a monthly salary, in your case, what is your advice on financial management? I'm sure there's a lot of advice you can give.
So I think, the main thing that's important, even before you talk about financial management, is to actually visualize what type of future you want, right? What is it that you're passionate about? What are your goals? And how do you want your life to progress, right? So, I mean, you need to visualize that to first, right? So, and all of us have different, different things that we're interested in, different passions. So it's important to first identify what your goals are, and then you start working through what are the, what should be your overall plan. And I think here, one of the main things that I would say is that, when you make a salary, right, and a salary or money really is effort multiplied by time, right? The more effort and you put in, and the time that you put in that effort is represented by a certain figure of money that you get.
I believe you can add that equation to anything. I think whether it's Absolutely. Getting better at a skill, whether it's getting better at work.
Exactly. So when you have a representation of, okay, this is what my effort is worth, and you can then store that effort to use at a different point in future, right? So it's a bit like how you charge your mobile phone, right? So you have a phone, you charge it with the electricity that you have now, so that you can use it in the future. So that's what money and salaries and stuff is. So then you need to kind of look at, if it's a representation of my effort, what is the first priority I should do? And that is to invest in yourself, right? So that is, in my view, the first priority. So normally, you should take at least 10% of what you make and save it and invest it in yourself, right? And then probably another 10% you take it for investing and taking a slightly higher risk profile than building that your nest egg that you have. And obviously, about typically around half of what you make should go towards your living expenses and things like that. And another 20% or so really should go in for things like having fun, enjoying the present, right? And also making some charitable donations and things like that. And the final 10% is what you save for an emergency, right? So I think, when you get a salary, rather than, just spending it all, I think if you have a plan and you have a budget, and you realize that this money that comes into your bank account is a representation of all this effort that you put in, I think that's a very, very good place to start. And obviously, for different people, the proportions that I just said will be different depending on what I said earlier, which is the goal that you set for yourself and what you visualize that you want to have for your future. But in general, you should be looking at these categories and you should be looking at how to distribute what you make.
That's a lot. So I think I can understand why people are very cautious with their money, because according to the mountain of things you just said, there are a lot of things to consider when you come into the field of money and wealth and managing it. So wow, okay, there are a lot to consider.
It's a lot to consider.
Yeah, continue.
But it's also, I think, important. So I think that's why a lot of people kind of shy away from it and say, okay, I'll deal with it on a different day. But the earlier you deal with it, the more comfortable you become over time.
You are the head of research and the head of regional finance of a very large bank, and Sri Lanka is going through a very tough time. I'm sure you know, with the economic crisis, all the problems with the government. So what's your advice to small or medium-sized organizations?
Yeah, I think, it's great to see Sri Lanka kind of recovering from where it was, and I think the path to recovery is going to be long, but I think it's recovering, so that's a great thing to see. So I think for a lot of small and medium-sized enterprises, and this is not just in Sri Lanka, but when I look at across a lot of other countries that we as Maybank operate in, and we look at some of the financial crises that these countries have gone through. There are a few characteristics that help companies come out of it, right? So I think the primary, the main one is having a healthy balance sheet, right? So balance sheet is like having muscles, right? So the more muscles you have, the heavier the load you can lift. And if you think of a financial crisis as a heavy load to lift, having a healthy and strong balance sheet for a company is very important, right? So I think if I'm an SME today, I will look at my balance sheet. I will see whether do I have too much debt in my balance sheet? How is my cash position? How are my receivables? And if some of those things are off, then I would look at how do I kind of mitigate some of those risks, right? So I think that's the main thing. So that's the engine of navigating through a financial crisis. But I think the second one is important to kind of look through to the future, which is it continuing to invest in your brand, right? For a lot of companies, when they go through tough times, the first thing that they kind of cut is their sort of building their brand, right? They kind of try to disappear. So I think especially during financial crises, it's important to continue to be in front of your target audience and your clients and remind them that you're there, right? And that the trust and the loyalty that the customers had given your brand doesn't leak away somewhere else. And I guess the third thing, and this is again something that we've seen with companies that have navigated recessions and stuff really well, is keeping your existing customers happy, right? Time when recessions and crisis hits, it's very hard to get new customers because the customers themselves are suffering. So you need to figure out, how do I keep the people who have been loyal to me on board, right? So how do I increase or improve my customer service? How do I really kind of provide that excellent sort of after sales support and things like that to continue to keep your existing customer base? And I guess the other part is, you try to diversify your revenue base, right? So if you're dependent on certain revenues prior to the crisis, you can try to see how you can pivot away to other adjacencies that are related to your business, but you can grow. I think you already have built your supply chains and your customer base for your existing products. You need to think about, how do I then use the same supply chains and same customers? What else can I sell them, right? So I think that's very, very important. And I think the final one for companies that become very successful are, crisis always brings opportunity, right? So especially if you're, whatever sector you're in, some of your other competitors may actually be shutting down or maybe having financial trouble. So it comes up to my first point, which I said, if you have a healthy balance sheet, then you can see whether you can consolidate some of those, right? You take over some of those market shares from your competitors, right? So and grow your business. So I think there's quite a few things that you can do. It's not very easy to manage, but it's something. There are a few things that you can do.
So there's a question here in the comments. Yeah. So from Mr. Ushan Chamin, question based on what you said. Why there's less education options or channels for young people on finance?
Yeah. So I think this is something that a lot of countries are starting to realize now. And I think it's becoming more and more urgent. So because you have all these young people who are entering the workforces without being fully literate in finance. You also have this very urgent situation where if you just take Asia alone, there's $15 trillion worth of wealth that is just about to get transferred in the next 10 years from the older generations to the millennials and the Gen Zs, right? So $15 trillion is 3 times the economy of India, right? So I think for the longest time, people thought of money and investments as a byproduct of just getting a good education and getting a good job. You kind of figure it out. But I think now it's becoming much more evident that people are not making wise choices. So you're starting to see some changes in Singapore. You're starting to see a financial literacy curriculum being introduced in schools. We are starting to see in countries like the US and some of the European countries, financial literacy being incorporated into the school curriculum. So I think hopefully, we'll see more change coming through and more financial literacy being taught to children.
So I hope that answered your question. And I have another question. I don't know if my brother will scold me for saying something like this. He's gonna be mad probably. But I saw my older brother. He was checking the prices of gold. So is it a good time to invest in gold? Is it good to invest in gold?
Look, I don't know whether it's a good time or bad time, right? I mean, gold is it should be, and gold and other precious metals like silver and stuff like that can be a part of a diversified portfolio that you have, right? Along with other asset classes, it is a good it can be a good asset class, right? So I think whether the timing is right and things like that really comes down to where the market cycle is, how you think the interest rate cycles are going to go, and so on and so forth. But let me just take a step back because you brought this up. One of the things that I see in my line of work, because we have a large stock brokering business as well. And we do see a lot of people who get very excited about the flavor of the month stock or, the hot tip that they get from a friend and so on, right? And then they start to put their life savings into these things. I mean, we've seen this through multiple cycles. We saw this with crypto. We saw this with NFTs in 2022. Tech stocks, all that sort of stuff. People get very excited about, get carried away, and they follow these hot tips. What you don't see on the other side, and this is something that I see fairly constantly, is that the people who lose money are more than the people who make money, right? So it doesn't look like that in the media, because normally the media will only show the crypto billionaire or the guy who made a lot of money on NFT, but that's selection bias. So most of the time, most people, by the time they actually enter a hot tip or a hot stock, the market is very efficient. The people who are giving these hot tips and hot stocks have already gotten ahead of you, and most of the time the people who get in end up being the losers. So I think what's really important is, rather than saying gold is good now, or crypto is good now, or commodity stocks are good now, is to figure out what sort of a portfolio do I want to have, what sort of risk profile do I want to have, right? I mean, and what am I investing? Am I investing my life savings, or am I investing something that I can afford to lose? So depending on the type of investment that you're making, your portfolio will change, and the mix of your portfolio will change.
Okay, so maybe I'll tell my brother to tune in and listen to that part, especially for him. So maybe he can get an idea of whether he should do it or not, probably. Now, I've heard that a lot of people are investing in fixed deposits, and I've seen a lot of people invest in fixed deposits. Now, why exactly? Like, aren't there any other options for you besides fixed deposits to invest in?
Yeah, so I mean, I think in Sri Lanka, one of the reasons why a lot of people invested in fixed deposits and treasury bills recently is because the yields were very, very high. I recall there, some of them were giving 20%, 30% sort of yields, right? So these are very, very high yields. So I think people invested in them versus other asset classes. Now, I mean, I think as Sri Lanka kind of progresses out of this financial crisis, these yields will fall most likely. But I think, fixed deposits and cash are again important part, and it should be a critical part of whatever portfolio that you have. But there are other asset classes, right? So I mean, there are stocks, there are bonds, as I said, there are commodities. Now, not all markets you will have the ability to access all these different asset classes, right? So, I think in Sri Lanka, you might not have the same range of, asset classes, the derivatives and things like that you can play to diversify. But I think you still get a sufficient diversification from a Sri Lankan context in terms of stocks, bonds, commodities, as well as cash. So it really comes down to your risk profile, what you are trying to achieve through your investing, right? So if I'm a retiree, I'd rather just invest in a fixed deposit, right? Because I know my capital is protected and I get a very high yield, right? But if I'm somebody who's younger, who's looking to grow my wealth, then a fixed deposit is not going to help me with that.
Okay, so that's why people are investing in these fixed deposits. So the world is talking about a recession period, and it makes my head kind of hurt because Sri Lanka is already going through a tough time, and now there's going to be a recession for the whole world. So is this true? If so, how do you minimize the risk?
So I think a recession is most likely going to happen. I mean, we are kind of we are already starting to see industrial growth slowing down in most major economies, and even in China, we've seen that the economic numbers are coming in a lot lower than what is expected. We are, so I think, and if you look at the bond markets themselves, they're kind of, very strongly signaling that a recession is on the way. But despite that, I think one of the sort of mitigating factors, and I guess in a way, good news, is that if you look at the US market, the US market and the US consumer is sitting on close to $2 trillion of savings, right? Because there was a lot of, stimulus that was provided in the US during the COVID crisis, COVID epidemic, and then also during the early part of the Biden administration with the Inflation Act. So the US consumer, and the US is a very consumer-driven economy, is very, very cashed up. So I think, and unemployment levels are quite low. So I think it is possible that the world is entering a slower growth period and a recession. And normally, if you don't have China coming in, and this is what we saw after the global financial crisis in 2008, 2009, when the world kind of entered into a recession. China came in and, kind of revved up their domestic economy, and that kind of helped us come out of the recession quite quickly. This time around, I don't think China can do that. So I think we have to hope that the US can kind of continue to hold the world economy up. But I think I said there's some good news, and I think the good news is even if we do have a recession, most likely it'll be a fairly shallow one, not like the ones that we saw back in 2008, 2009, or the Asian financial crisis, and hopefully we'll be able to come out of it relatively quickly.
So it is possible, and the chances are higher than there is a possibility of it happening. It's not like it's never going to happen, that there's a chance.
I think the bond markets right now are forecasting somewhere around a 75 to 80% chance of a recession in the US in the next second half. Yeah. But yeah, so I mean, I think recession, yes. How deep and how painful, I think that's what we don't know right now. But looking at where unemployment numbers are, looking at consumer sort of savings across the major economies of the world, hopefully it should be a fairly shallow one.
So I heard that you started an edutech company. Can you tell me more about it? I'd like to know about it.
Yeah, sure. So this was a passion project of mine back in 2015. Me and a co-founder, both of us are bankers. We actually set up this educational technology company called Create Lab, and the sort of purpose of the company is to educate children on 21st century skills and competencies, right? So I mean, I think this is something that I'm very, very passionate about, because I think what you just learn in school is not going to be enough for the workplace that kids are entering, right? Even today, when I look to hire people, right, and I look at the hundreds of CVs that I get from all over the world to come and work in Singapore and come and work for Maybank. What they did for their degree per se is the lowest priority or the lowest weighting that I give, right? I actually look at, are they creative? Can they collaborate? Is there evidence that they can work really well as a team? How is their communication skills, right? So can they synthesize, across different divisions, right? Is evidence of that. So I think these skills are going to become more and more important going forward for the workplace, right? And especially now, I'm sure you follow the whole sort of ChatGPT and AI phenomenon that we're going through, right? So a lot of things that we thought cannot be replicated can be replicated by machines. So then we need to figure out, how do we let the machines tell us what to do, or do we
trust our gut?
Do we trust our gut? And also, do we control the machines, right? So do we have the competencies to do that? So I think that was a kind of what we want to do with Create Lab. And how we do that is we build curriculums for coding, robotics, design thinking, innovation, and we partnered with a few universities, the University of Oxford, MIT, University of Washington, and we develop curriculums that can then be used across different schools as well as online and offline as well. So we started in Singapore. It's been a great journey. I mean, we've become one of the largest coding and robotics schools in Singapore. We work with quite a lot of the schools here and the Ministry of Education here. We also are expanding quite rapidly in India, and we also have operation in Colombo as well, in Barnes Place, where we have a center, and we also work with a few schools in Colombo as well.
That's great. Now I have a bit of a practical question that I've been meaning to ask you. So let's pretend I suddenly magically manifest 1 million rupees and I have 1 million rupees now. And I can invest in an education program or in a fixed deposit. How do I decide on which I invest in? How do I decide this?
Look, so if you have a fixed deposit, you will get interest, and it will grow at a regular pace, right? So interest will grow, and you'll get you know what the pace of growth of your fixed deposit is. Now, if you invest in skills, right, in your education program, and you actually build skills, the thing with skills is that the more you do it, the better you become, right? So your ability to do something, because you've got this special knowledge, grows. It actually accelerates, right? So over time, the more you use that skill, your ability to kind of do that accelerates. So for me, I always look at risk and return, and I'm an asset guy. So I'd rather invest in the asset that grows exponentially over time than the asset that only grows regularly, right? So absolutely, always between, especially at your age, and invest in skills that can grow than anything else.
Because if I'm investing in an education program, say that improves my knowledge on business and managing my money, then if I get another, and if I manage to get another 1 million rupees, by then I'd be educated and ready to put it into even better use than that. Is that what you're saying?
Absolutely.
Okay.
So invest in exponentially growing assets.
At what age should people really learn about the stock market and other investment and methodologies and all that? At what age should someone get into this investing and learning about it?
So I think what's interesting today versus when I was younger was the access to information and knowledge and data is a lot more democratized, right? So it's available on the internet. There's so much information available, right? So that was not the case when I was growing up, right? So when I was even doing my internships in Colombo for Jardine Fleming, we still had dial-up modems, and finding a data series on anything was a job that took few weeks. Now that's not the case anymore for most people who have access to the internet and so on. So there's a wealth of information that is out there. One of the things that kind of got me interested was when I was about 15 years old, my parents gave me a little bit of seed capital and allowed me to set up a stock market trading account. And that kind of got me interested in investing and really researching on companies and understanding what they do and how they can grow and things like that, right? And it was a very manual process at the time. I had to take paper annual reports, go through that, do all that. Right now today, if you go on to oanda.com or Bloomberg or whatever it is, you can get most of the financial data in a matter of seconds. So I think there's no specific age. I think the age, if you're passionate about it, you should.
And if you're smart enough to understand, you should give it a go.
You should give it a go. Absolutely.
Okay. So if the audience has any questions before we wrap up, I have one last question still, and it has two extra questions actually. So you, as an investment expert, okay, I have two questions to ask you. What advice do you have for parents? Parents of children.
I think, for parents, I think and I think I've touched upon this before as well. I think you have to have a plan, right? You need to have a plan on how you kind of see your priorities in life, and having the clarity of thought on how you're going to kind of execute on that plan and getting those goals for yourself, right? And I think for parents, it's very important that they invest in themselves first, right? Whether it's investing in additional skills or savings, as I said, right? The salaries and whatever whatever money that you get in is a representation of your effort, right? So you should invest in yourself. And I think the third one is, I think for parents to understand that money and investing and family finances is not a single parent job. It's a parent for both. It's a job for both parents, right? For a lot of mothers, this is not a job for the husband or just the father to do. I think for mothers, for women, they need to be involved in the family finances, as an equal partner. And I think the other one really is about having a healthy relationship with money and showing that you have a healthy relationship with money to your kids, right? To have open conversations, right? So, and not have negative conversations, right? So I think it's important to have, rather than, when your kids say they want something, it's rather than saying, oh, we can't afford it, right? Which is a negative conversation and negative connotation on money. Like say, actually, we are saving up for something else. So that kind of gets the child involved in family finances and how you kind of set your priorities.
You sound exactly like my dad when you said that. When you said that negative stuff, don't say we don't have it. We don't need it. We'll save for something better than that. Like, don't say that. He's always into the positive thinking. Don't think negatively.
Absolutely.
So you reminded me a lot of how he says it.
Well, I think he definitely knows what he's talking about. So absolutely, I think.
Yeah. I'm sorry for cutting you off. Continue.
No. And I think I guess the final one is to speak to experts early, right? I mean, I think your personal finances, your money is not a journey that as parents you should take alone, right? And it is quite complex out there, right? The products that are available, the messaging, so many things are very, very complex. So making those right decisions for your family is not something that you should do alone. You should speak to experts who know the subject, and get their opinions, and also do your own research as well. As I said, I think the availability of information is a lot more today than it has ever been.
Yeah, I agree. You can just, if you want business knowledge or advice on how to spend your money, you can just go to YouTube, and it's just like that. All that knowledge is handed to you free, no charge at all, no money cost, nothing, just internet. So yeah, thank you for that advice. And audience, any questions you can ask. We're running out of time here, so if you want to ask somebody, if you want to ask this person, Mr. Thilan, any questions that you have, you can ask him, because this might be a once in a lifetime opportunity. Who knows the next time you get a chance like this. Mr. Thilan, I have one last question for you about similar to parents. What's the advice you can give to kids about heading into their future?
Yeah, so I mean, I think it's fairly similar to what I told the parents in a way, right? I mean, I think kids need to understand that money is a representation of themselves, right? Of their effort. So they need to be respectful of it and invest in themselves. So I think that's very, very important. And I think for kids today, and I guess for us millennials as well, the world doesn't make it easy, right? I mean, we are the social media generation. Kids today are very much motivated more by likes and follows and things like that. And sometimes when you're motivated by that, you and the sort of best lives that they see on social media that others are leading, you tend to make bad choices when it comes to money, because you end up buying stuff that you don't need because you saw that on Instagram or whatever, right? So I think having that right motivation is important, and I think also the financial system and the financial technology that is out there with fintechs and stuff like that is also kind of driving this massive propensity to spend, right? I mean, you have fintechs that do these things like buy now, pay later, and so on, right? That kind of drives this whole instant gratification when it comes to money, right? You just buy it, but you don't figure out how you're going to pay for it later. But I think you need to kind of be cautious of of these sorts of innovations, because you end up getting into debt that you don't necessarily need. And I think the sort of a couple of final points I would say is, one is start educating yourself and start planning early, right? So there's nothing called the right time to plan and have your finances in order is now, right? The earlier you start, the earlier you can get to financial freedom, right? Where you don't have to live with debt, and you can kind of pursue your passions and so on. So I think that's very, very important. And I think there is this sort of conversation that for a lot of young people, they're out there saying that, especially for the Gen Zs who are characterized as, they don't believe in owning things, they just believe in using and renting things. But I think building assets as early as possible is important, right? Because investing in assets is always better than investing in liabilities. And just to give an example, like a lot of people say, I don't need a house, I'm just going to rent, right? But the thing is, when you rent, all you're doing is you're paying for somebody else's asset, which you will never get a return over the longer term. So I think being responsible, building assets, not getting too carried away with social media and instant gratification. I think those are some of the key things that I would say are important for young people.
Okay. So audience, any questions you can ask? Nice discussion and nice advice. There should be more like this on the finance for youth. Many children in Sri Lanka suffer because they don't get this knowledge at the right time. Yeah, I agree. The kids don't. I'm actually personally very lucky to have. I'm very happy that you accepted the invitation for the interview, Mr. Thilan, because I also learned a lot from this, especially for someone of my age to learn this information from an expert in the field like yourself.
No, great to be here, and keep doing what you're doing, Natil. I think it's fantastic what you're doing. Very, very inspirational, and hopefully, you will get the message across to as many young people as possible.
Okay, so I don't think we have any questions. So let's end off the live here. So the audience, thank you very much for tuning in. I hope you enjoyed the session, and I hope you learned a lot from our legend in financing here, Mr. Thilan. And of course, to you, Mr. Thilan, thank you very much for accepting the invitation. And I know your time is very important to you, and you spent some very valuable time, because you just talked about how time management and money management is important on the live itself. So I'm sure you also spent an entire hour of your time here. So thank you very much for that.
Thank you. Thanks for having me.
Okay. Thank you. Thank you, audience, for tuning in.